So you've given trading a shot and now you've heard about futures props, but you have no idea where to start. In this video, I'm gonna be walking you through A to Z what you need to be looking for as a potential futures prop trader. First things first, let's make sure you understand what futures contracts are, how they trade, where to find information on them, and what you're actually trading. So by their definition, futures contracts do sound really similar to options. If any of you have traded options before, it's an agreement between a buyer and a seller for a price of an asset at a future date, right? We can go long or short on these contracts, but it's an exchange between buyers and sellers on a potential price in the future. Just like options, most of the time people are not holding these contracts until expiration. They are just day trading them based on their value, whether the asset actually goes up or down in price throughout the day. Really nice difference though between futures contracts and options contracts is that futures do not have any Greeks. So those of you that have traded options before, I know you hate theta. I do too. That is going to be time decay. There is no time decay on your futures contracts. It is just a linear equation of the leverage and obviously the amount that the contract moves, which we will get to next. Different leverage and tick sizes. Don't worry, we will get to that. But just know futures contracts do not have the Greeks that options have, even though they do sound similar in definition at a first glance. So coming into the futures market, you may have heard of the CME. That is the Chicago Mercantile Exchange. So futures contracts, when they first came into the trading world, as I said, they were just agreements between a buyer and a seller based on a potential future price of an asset. At some point, some regulation needed to step in and there needed to be a way to centralize all of these different assets and contracts. That is where the Chicago Mercantile Exchange comes into play. This is where futures contracts are centralized, right where you guessed it, Chicago. But for you as a futures day trader, all you really need to worry about is that this data is centralized and it does come through a singular exchange in the CME. So that being said, the CME website is going to become your best friend as a potential futures trader. I've got it up on my screen here, but you're going to want to head over to cmegroup.com. This is where we can start to look at our available markets and what assets we're looking to trade. So if I come right here into markets, my personal favorites to trade are going to be ES and NQ. We're going to go over the different tick sizes and what these contracts mean as I click on them here in the video. But let's start with ES here. This is the E-mini S&P 500 futures. So those of you that maybe are coming over from shares or ETFs, you've probably traded SPY or at least heard of it in the past. SPY, SPX. Now in the futures world, you're going to be trading ES. We'll get to micros in a minute here, but the main contract for the S&P 500 futures is going to be ES, as I just said. Let's go ahead and click on it here on the CME's website. So we can read an overview on the contract here. Always a good idea if you are brand new to futures. Go ahead, click through the website, read some of the overviews so you understand. But we're going to go ahead and look at quotes here. So while I'm making this video, it is August 2025. The current front contract, the one with the most volume on ES, is going to be the September 2025 contract. Again, you can see they do have it right at the top of the site, the CME website, because it is the one with the most volume. You can see over here on the right side of the screen, you can see it does way more volume than the March 2026 or the December 2025 contract. You are going to want to always trade the front contract, no matter what you are trading, whether it be ES, NQ, gold, soybeans. You as a day trader want to pick this contract that is right at the top of the CME website. This is why I mentioned it will become your best friend as a potential futures trader. So the current contract on ES is ESU5. Again, that represents the September 2025 expiration contract. We can see my last price. We can check out the chart here if we want. I recommend actually using your charting platform rather than the CME's chart for day-to-day price movement. But we can see the prior day settlement, the open, the high, and the low. But again, the main thing you really want from the CME website here, guys, is going to be checking that you have the correct front contract, which right now is ESU5, and that you are indeed trading on the contract with the most volume, which again, you can see right here on the CME Group website every single day. We're going to want to click on the contract specs page. This is going to help you understand tick sizes and margin based on whatever contract you are trading. So first thing we're going to notice on the contract specs page is going to be the contract unit right up top, which the S&P, The ES contract is going to be $50 as our contract unit. So we need to understand how that actually relates to tick size and contract movement and the net gain or loss in our pocket as a trader. So we can see right here, minimum price fluctuation. Those of you coming over from Forex, you guys use pips when you talk about the smallest amount that a CFD price can move. Over here in futures, our minimum price fluctuation are referred to as ticks. So our outright value on the S&P 500 ES is going to be 0.25 index points. Most of you just looking at it in the dollar amount, that's going to be 25 cents. That is one tick, is 0.25 index points. Now that returns to you as a trader $12.50 net gain or loss. So most people like thinking in points rather than ticks. And what I mean by one index point, guys, is going to be 4 ticks. You can see right here, 0.25 index points. So one full point would be 4 ticks. And that means $50 net gain or loss in your pocket for every 1 point of movement on the ES contract. And remember, I said the first thing you want to look at on your specs page is going to be contract unit. You can see now how ticks relate to this contract unit. So every 1 index point on ES, you get a net gain or loss of $50 in your pocket as a trader. So again, things we want to check on the specs page are going to be contract unit and then our minimum price fluctuation or tick. Right before we came to the specs page, you guys saw me talking about the different contract expirations. You can get more information on how frequently an asset has their contracts expiring. Right here in the listed contract section, you can see here, ES and most major indexes, whether it be the DAX, NASDAQ, Dow, they are going to be quarterly contracts. You can see here listed in March, June, September, and December. As we said at the start of the video, right now in 2025, the September contract is the front contract, is the current contract that most traders are trading. But you can see they are listed for 21 consecutive quarters. Not super important for you as a day trader other than knowing, hey, this is going to roll over every couple of months for me. I need to make sure I am on the correct contract. Next, let's hop back over to one of the more popular assets in the space, and that is going to be the NASDAQ, which is NQ. Again, right on the CME website. Please make this website your best friend, guys, if you are a potential futures trader. This will have any information you need. Let's dive into NQ the same way we just did with ES. So we can see the current contract is going to be same as ESU5. NQ's current contract is going to be NQU5. Again, September contract. And let's take a look at our quotes, our settlements, and our specs here. So again, if I come right into the quotes page, guys, we can see September contract right at the top. It does indeed have the most volume. You can see it actually is significantly less volume than ES. NQ is so popular in like the social media space of futures trading, but you can see ES really is king when it comes to volume in the future space. So just like our ES page, you can see just again, our change in price on the day, our prior settlement, our open, our high or low. But again, the thing we're focusing on here as futures day traders is going to be the volume. Just make sure we have that current front contract, which again is NQU5 as I'm shooting this video. But let's head into the specs page so we can understand the margin of an NQ contract. So once again, first thing we're going to look at is going to be our contract unit, which is $20 here on the NASDAQ. So again, if you learned anything from ES, we know ES, you get a net gain, a loss of $50 per 1 contract of ES. NQ, we have a $20 net gain or loss per 1 point of a NASDAQ move. So once again, our minimum price fluctuation, our tick size on NQ is also a quarter index point. We can see here 0.25 index points equals $5 net gain or loss. Obviously times 4, just like we did on ES, puts us at $20 net gain or loss per 1 point of NQ move. NQ also has quarterly contracts similar to ES. Again, March, June, September, December, listed for 6 consecutive quarters and 4 additional December contract months. So not quite as many as ES listing. Again, ES really is king when it comes to futures, but NQ is incredibly, incredibly popular. And again, most of you coming from social media will probably see mostly NQ traders. The reason for that, even though it does return a lower rate of net gain or loss per 1 index point compared to ES, is going to be because NQ is so volatile. So when the CME and market makers started setting these contract units, they were trying to consider expected volatility. And what I mean by that is ES is way less volatile than NQ. That is why ES returns more per one index point compared to NQ. NQ has gotten so volatile over the years though, even that 20 to 50 comparison seems almost heightened on NQ just because of that volatility. So if you're wondering why isn't everything one-to-one, the CME and market makers overall did try to consider expected volatility when it comes to contract unit sizes. So that covers NQ and ES. Again, those are my personal choice when it comes to what contracts I trade in the futures space. But there are so many different markets available. You can even see right here on the CME Group's site. We have corn, we have soybean, we have crude oil. All of these are available to trade on most major props. They are all available here at Alpha Futures. Those of you coming over from Forex into futures are probably going to be looking to trade the euro, which is incredibly popular over here in futures. That also is available. Something consistent across both Forex and futures traders. There are plenty of gold traders. You can check out the specs, the margin, and the volume of all of these contracts on the CME Group website. Please do that before you start placing trades in futures. Make this website your best friend. All right, now that we've covered different contracts and how you can understand what their contract unit and tick size are, how can we actually use futures props to our advantage as retail traders? So you may have been doing the math in your head just on the contract units, but 20 NASDAQ is not cheap, right? It's about a $23,000 asset as we're making this video today. 20 of them, we're talking about an over $400,000 position. Now, I don't know about you, but I don't have 400 grand sitting in my personal brokerage account, and I'm sure most of you don't sitting at home. So how can we actually trade these assets? The answer is going to be leverage, which some of you, that might make the hair on your neck stand up. Some of you might be getting very excited right now. The main thing here is trading prop firms gives us access to leverage we would not have on our own personal brokerage accounts. Most brokerages out there give you one-to-one leverage. Most prop firms are going to give you much more access than that. For example, on a $1,000 personal account, most brokerages would not even let you trade one contract. Some out there might, but none more than that. So when we look at prop firms, most props out there offer $50,000 account sizes for evaluations. On those evaluations and those accounts, you typically can trade up to 5 contracts, and their entry fee is going to be well under $1,000. Ours here at Alpha Futures, our starting 50K account is $79 per month. So you can see the cost to entry for much more leverage is going to be way lower with prop firms. This is what I mean. Us as retail traders, we can use prop firms for an advantage to gain more leverage with a lower cost to entry. So now you're probably asking, what platforms can I use? Here at Alpha Futures, we do offer Tradeovate, NinjaTrader, Project X, which has become very popular in the space, TradingView, and Quant Tower. Let's get a better understanding of futures prop firms models. There are some straight to funded options out there, but for the most part, it'll be as follows: evaluation, sim funded, and then live funds. The goal of all futures traders should be working towards live capital eventually, but before a firm just puts you on live capital permanently, they need your trading history and proof that your trading strategy actually is sustainable. But that is what we're looking at when we talk about futures prop space. We're talking about a simulated evaluation into a simulated funded account, but from there we will eventually be moved to live funds if you are consistently profitable. The terms we use here at Alpha Futures are going to be evaluation, qualified account, that is your sim funded account, and then prime accounts. So that is our live program at Alpha Prime. I will save that for another video. So just so you understand the vocabulary we use here at Alpha Futures: evaluation, qualified, live. Other firms use things like combines or challenge when they're talking about the evaluation. We're still talking about the same thing. And qualified, others will call that sim funded or XFA, PA you might hear. But again, we are talking about the same model here of sim evaluation, sim funded, live funds. So let's break down each of those stages, starting with the evaluation stage. First, let's talk about the goal of the evaluation. That is going to be a profit target. Now that does range anywhere from 6 to 10% in the space. Our standard accounts here, as well as our zero accounts here at Alpha Futures, are going to be 6%. Our advanced accounts profit target is 8%. As I said, in the space, you'll see anything ranging from 6% to 10%. We obviously land right in that range as well. But during your evaluation, in order to pass, you're going to need to meet a profit target. That is consistent everywhere in the futures prop space. So that is something to learn. Number one is check out what your profit target is on your evaluation. Number two is going to be your maximum loss limit. So please be careful in reading the terms and conditions of each firm. Every firm does do this a little bit differently. Something that is consistent in the future space, though, is going to be trailing drawdown. There are two major types of trailing drawdown in the futures prop industry. That is going to be intraday based or end of day based. Now, I personally am not a big fan of intraday based. And what I mean by intraday trailing drawdown is anytime you make a gain on your account, your equity is going to change on the account, both realized and unrealized profit. Intraday trailing drawdown is still going to trail those unrealized gains. So let's say an account has a 3% drawdown. My trade goes into 3% profit, comes back and gets me at break even. At some firms, that would be a breach of the evaluation and you have failed your evaluation. That's not the way we do things here at Alpha Futures, and many other firms in the space do not as well. We use end of day based trailing drawdown. So what that means is you could take as many break-even trades as you want throughout the day, and your maximum loss limit would not gain until your balance actually closes at a higher balance end of day. In my opinion, this is way easier to navigate. It's much less stressful as a trader, and it allows for me to actually let my trades play out rather than just close out every single win the second I see green because I'm worried about my equity trailing drawdown intraday. Now, what you'll see from a maximum loss limit, the norm in the space, there are some as tight as 2% drawdown, some as large as 5% drawdown on that intraday trailing drawdown. Now, end of day based, you're going to see anywhere between 3 and 4% in the industry. On all of our standard and zero accounts here at Alpha Futures, we offer 4% end of day based trailing drawdown. That is some of the most competitive, if not the best in the space, but just preparing you for what you should see as a trader in the space. That will be anywhere from 2 to 5%, but make sure to check if it is end of day or intraday trailing. Those of you coming over from CFDs probably are thinking that's really tight compared to the 10 or 8% you're used to at CFDs, but I can promise you the platforms, the execution, and the data is far superior on the futures side, so that is why you see the drawdown much tighter. You're actually getting much more of an advantage as a trader when it comes to execution, so those drawdowns don't need to be as wide. Next thing to check for on your evaluation is going to be daily loss limit. Now, for the most part in the industry, this is going to be a soft breach, meaning if you hit your daily loss limit, your account is just locked out until the next day, but you can come back and trade the next day without it being a fail. That is not true at every firm. Some firms either don't have daily loss limit on their evaluations, or it actually is a breach. Here at Alpha Futures, our standard and advanced plans do not have a daily loss limit on evaluation only. Our zero account does have a daily loss limit of 2% of your starting account balance. But again, that is just a soft breach. You can come back and trade your evaluation the very next day. No penalty then. Next rule I want to go over, and this is probably the most confusing to those coming over from the Forex space, is going to be consistency rule. If you've been in the future space at all, it's probably something you realize you can pick up very quickly. But if you are a potential futures trader, somebody that hasn't looked into props before, it can be a little bit confusing, but I promise you will pick it up quickly. So the norm for consistency rules in the space is anywhere from 20 to 50%. Now, at first, you might be thinking 20% is actually easier to follow. It's the other way around. The higher consistency rule you see, the easier it will be to follow. So again, anywhere from 20 to 50% is what you see in the space. But let's talk about why the higher number is actually easier to follow. Consistency rule is going to be your largest day divided by your net profit on the account since last payout. So if I have a $1,000 day, that is my largest day on the account, but it's my only green day on the account, my consistency rule would be 100%. 1,000 divided by 1,000 is 100%. Let's say I actually am able to have that $1,000 day 3 times. Now my largest day divided by my net profit since last payout would be 1,000 divided by 3,000. That would be a 33% consistency rule. Now here at Alpha Futures, we operate with a 50% on our evaluations for standard and advanced accounts, and a 40% on standard and zero account qualified accounts. That would be satisfying the rule on all of our accounts here at Alpha Futures. But I did mention you will find some companies out there that operate with consistency rules as tight as 20%. that would not qualify as satisfying the rule yet. In that case of 20%, you would need 5 times whatever your largest day is. So again, using the example of $1,000, to satisfy a 20% consistency rule with $1,000 largest day, I would need $5,000 net profit since last payout to satisfy that. Again, 1,000 divided by 5,000 equals 20%. It is just a basic ratio. A lot of people think there is more going into that calculation. It is just a simple numerator, denominator, and you get your fraction. Obviously, a fraction times 100 is just a percentage point. That is all there is to a consistency rule. No need to overcomplicate it. Just keep track of whatever your largest day is and what your net profit is on your account. The main thing for you to be concerned about as a trader when it comes to consistency rule and evaluations is just how many days is it going to take me to pass my evaluation. A 50% consistency rule is obviously just splitting your profit into 2 days. You can pass the evaluation in 2 days. So here at Alpha Futures, our standard account and our advanced account have a 50% consistency rule. That means you can pass them in as little as 2 trading days. Our zero account here at Alpha Futures has no consistency rule on its evaluation. That means you can pass that evaluation in 1 day. Now let's talk about costs when it comes to evaluations in the futures prop space. You will notice most of the listings in the futures space are going to be per month. Your evaluations are monthly subscriptions, typically until you pass or cancel. With us here at Alpha Futures, you can cancel your monthly subscription at any time in your dashboard. But the reason why they're set up as monthly fees, if you recall, the CME I was talking about at the beginning of this video, they work with data providers that then work with futures prop firms. These data providers charge firms monthly fees to be able to offer you data. That is why you see your evaluation fee set up as a monthly subscription. So please notice whether a website says per month or one-time charge. Most of the time in the future space, your evaluation will be a monthly subscription that, again, does rebill until you pass or cancel. Now, here at Alpha Futures, if you have already breached your evaluation, again, your monthly subscription is not canceled yet, but when it does successfully rebill, we'll issue you a new fresh evaluation. That pretty much covers it on everything you need to know about a futures evaluation when it comes to prop firms. But as we talked about, evaluation, sim funded or qualified as we call it here, and then live funds. So now let's move into the qualified stage. Let's talk about the same things we did for evaluation. So those were profit target, maximum loss limit, daily loss limit, consistency rule, and then fees. Starting with the profit target. This is a major difference between us and other firms. So here at Alpha Futures, our qualified accounts do not have any profit target. That means right when you become a qualified trader, you are trading on your sim funded account. Whatever you make is immediately going towards what you are able to withdraw. At other firms, however, they might have a secondary profit target, meaning you actually are not allowed to withdraw from your qualified account until you hit a 4% gain on the account. Now, to us, that didn't sit right because we felt like that's just making everything a 2-step evaluation, while much of the future space claims to have 1-step evaluations. Here at Alpha Futures, because we have no profit target on our qualified accounts, we feel we're one of the few, if not the only firm in the space that is sticking to our claim of 1-step evaluations. So make sure to check, do your qualified or sim funded accounts at other firms, do they actually have a secondary profit target when it comes to being a qualified or sim funded trader? Maximum loss limit structure is going to be the same for us here at Alpha Futures. Whatever your maximum loss limit structure was on your evaluation, your qualified account will be the exact same. That is the case for most firms, but not all. Some firms out there actually switch their structure of MLL between evaluation and sim funded. For example, some use end of day drawdown in their evaluations, and they actually switch their qualified or sim funded accounts to intraday drawdown because they obviously are looking to breach more qualified traders there so they don't have to pay them out. Not the case here at Alpha Futures, not something we are ever looking to do. All of our maximum loss limit here is structured the exact same, whether you're on evaluation or your qualified account. Whatever you were given on evaluation, you can expect the same in your qualified account. Up next, daily loss limit. Again, this is something you should look for as somebody that is a potential futures prop trader. Does this change at all between my evaluation and my qualified account? I personally am a huge fan of daily loss limit on qualified or sim funded accounts. It keeps me from breaching the account in 1 day. That's the approach we take here at Alpha Futures. All of our qualified accounts do have daily loss limits, again, that are soft breaches. That means you cannot fail the account by only hitting daily loss limit. You can only fail or breach your accounts by hitting maximum loss limit. So our standard accounts and our zero accounts, the daily loss limit is going to be 2% of whatever the starting balance was. So on a 100K zero account or standard account, your daily loss limit would be $2,000. Please note, this is the case across all firms. Daily loss limit does not replace your stop loss. Make sure to be using stop losses, especially if you want particular fills, because the daily loss limit is simply a trigger to the system that says, oh no, that's too much money. We didn't mean to let you lose that much. And then it sends a liquidation market order to the system. So you might be seeing a fill slightly above or less than $2,000. We get that question somewhat frequently. That is in the help center on our site. But if you don't see it at other firms, just understand your daily loss limit is not a limit order, nor does it replace your stop losses. It's just a trigger to the system saying, oops, this trader lost too much money. Let's liquidate them and get them out for the day. A nice feature on our advanced account we do have is going to be the daily loss limit is 2% of whatever your starting balance is that day. Meaning if I grow a 100K advanced account to 110,000, my daily loss limit would actually be $2,200 instead of $2,000. Just a nice feature that you actually can earn more risk as you gain on the account. But again, that daily loss limit is always a soft breach here at Alpha Futures. Again, some other firms can't promise if it's a soft breach versus not, but the typical practice in the space is going to be your daily loss limit is a soft breach. You can come back and trade again tomorrow. Up next, our consistency rule. This is going to be structured the same between evaluation and your qualified account. Make sure to check this out across all firms. Again, some operate as tight as 20%. I believe I've even seen some 15%ers out there. Our standard and zero accounts here at Alpha Futures will have a 40% consistency rule. All that means is continue to trade until you satisfy this rule. Now, a 40% consistency rule can be satisfied in as little as 3 trading days. As we went over before, if I make $1,000 3 times across 3 days, my consistency rule would be reading a 33%. That is under 40%. The rule is consistency score must be equal to or less than 40% to be able to request a payout. You're going to see that at many other firms too, but they might be as tight as 20%. Again, if you just needed a reminder, consistency rule is largest day divided by net profit since your last payout. And the last thing we'll cover here on the qualified or sim funded stage is going to be fees. So some firms out there will just continue your monthly subscription or actually give you a new monthly subscription when it comes to your qualified account, or they will issue a one-time activation fee. So here at Alpha Futures, our standard and advanced accounts do have one-time activation fees of $149. Our zero accounts are named after their $0 activation fee. So you will have no activation fee on zero accounts here at Alpha Futures. It is pretty mixed in the space. What you will see out there, around $150 is the norm in the space. However, sometimes you'll see more, sometimes you see less. But $149 for our standard and advanced accounts here at Alpha Futures is what we operate with. But again, our monthly subscriptions do stop once you pass your evaluation, moving into qualified, or you cancel your subscription. And then if you do pass, you pay your activation fee, then you get access to your qualified or sim funded account. Now, once you are a sim funded trader, let's talk about what you're looking out for next. First thing you're going to want to look out for, in my opinion, is going to be your firm's news trading rule. So here at Alpha Futures, we do have a news trading rule on our zero and standard accounts. Advanced accounts have no news trading restrictions at all. We feel that does track well with what we're trying to accomplish here. Our zero accounts being our cheapest all-in price, lowest cost to entry for our beginner traders. Standard accounts, again, in the name, your standard trader. That is going to be people that are trying to develop habits, maybe not perfected them yet. And then our advanced account is for the advanced trader that already understands news releases, the fundamentals behind them, and how they can affect their account. So we actually have no news restrictions on our advanced account. But our zero and standard accounts do have news restrictions. Now here at Alpha Futures, a news trading violation is not an automatic breach. We understand mistakes do happen. Navigating the markets can be difficult, especially for beginners. So you will always receive a courtesy warning before your account is breached, meaning when you request a payout, you will be given an opportunity to review your trading history and then get back to it without your account being breached and us taking it away. Now, if somebody continues to ignore our rules or continues to make the bad habits of trading during news on a zero or standard account, your account will be eventually breached, but we do obviously give a courtesy warning before that happens. Now, our news rule does read that you can trade news with restrictions. And what that means is if there's a CPI release, let's say at 8:30 a.m. Eastern time, you cannot execute any orders 2 minutes before or 2 minutes after that news release. You may hold your trades through the release if you want to, but executing in that 4-minute window will result in a news trade violation. I cannot promise the same for other firms. Some firms require you to close the positions completely. Some firms will require that you actually do completely close your positions going into those events. Others will allow you to execute freely the way our advanced plan does as well. But the main thing here is no orders may be executed in that 4-minute window here on zero or standard accounts. And that does mean stop loss, take profit, or entries. Order execution is order execution. That 4-minute window doesn't need to be looked out for. For us here, we do publish the events every single week in our Discord. They also are posted right on your Alpha Ticks charts. But again, please make sure to review news trading restriction rules at your firm before you get started on your valuation or your SIM funded account. Again, just note some firms, this is an automatic breach. Sometimes it's a warning. Sometimes there's no restriction at all. It is something you need to look out for though as a futures prop trader. The next thing you should review as a potential futures prop trader is going to be prohibited conduct at your firm. This is slightly different at every firm, but for the most part, it is going to be consistent on what you should and should not be doing. Some major ones that you cannot do at any firm is going to be hedging. Whether that means going long on one account, short on the other on the same asset, or using micros to go long and the mini to go short on the same account. Hedging is prohibited across all futures prop firms. Obviously, that would just be cheating the system. Again, this is a way for you to get access to more leverage with a lower cost of entry. If we are just cheating the system, then it gets broken and it doesn't work for anybody anymore. Some other ones to look out for would be the micro scalping rule. Now, us here at Alpha Futures, we do have one of the more lenient ones in the space. That is going to be you need to hold your trades for 10 ticks or 2 minutes. So that means one or the other is completely fine if your trade is less than 2 minutes, but more than 10 ticks. As we went over at the beginning of the video, that is only 2.5 points on NQ. That is completely fine. Or if your trade is only 3 ticks, but it's 4 minutes long, for example, also completely fine. So please read up on the micro scalping rules at other firms. Some firms have rules like 5 points or 30 seconds. Just make sure to read up on those. But ours here at Alpha Futures, we do feel is one of the most fair in the industry of 10 ticks or 2 minutes. Take your pick. Both are very easily obtainable, and 99.9% of our traders here at Alpha Futures never have an issue with it, but just something to keep an eye on as a potential futures trader. All right, and the final thing we'll talk about here, and this is the most exciting part, what you're all here for, is getting paid. So last piece you need to walk through when you're choosing a firm or when you're going through their help center is going to be looking at their payout policy. We already talked about MLL, DLL, consistency rules, but payout policies are extremely important too. Now, payout policies for the most part will be just confirming you followed your maximum loss limit, you followed your consistency rule, but make sure to read through them because some firms out there may be adding additional terms and conditions that you didn't know that were there. Let's take the positive route here and just talk about some of the more general things you'll see in payout policies in the space and just things to keep in mind because you are agreeing to it as a trader. For the most part, structures on payout policies are either going to have the requirement of winning days or trading days or a set payout date. We do offer both here at Alpha Futures. Our zero account and advanced account, you can get paid every 5 winning days of $200 or more. So obviously if you have a really hot week, you can pay yourself out once per week. Or if you want to go with our standard accounts, that does have set bi-weekly payout dates, which are just every 14 calendar days from the first trade you placed on your account. So you really just need to decide, am I a more patient trader and I'm fine waiting for my payout date, which typically comes with lower or easier requirements to hit, like our standard account of 40% consistency rule. That does only take 3 trading days to satisfy. You could just wait for the 14 calendar days until your payout date hits. Or if you're somebody that enjoys trading more frequently, the zero account or advanced account with us would probably be something you opt for because then you could just pay yourself every 5 winning trading days. What you'll mostly see in the space though is going to be either be 5 winning trading days of $200 or more, like we have here on our 0 and advanced plans, or sometimes they will have the winning days and then they'll also tack on a trading day requirement, meaning you need to trade 8 to 10 trading days in between each payout, and 5 of those must be winning. We like taking the approach of one or the other here at Alpha Futures. We don't like having the trading day requirement and a payout date and winning days. It's one or the other. You either have a payout date with our standard plan, or you can pay yourself every 5 winning days on our 0 account or advanced account. Have a read through the payout policies though. Again, you're looking at winning days, trading days, and payout dates. Now, the last piece to look at is, of course, the maximum withdrawal. Here at Alpha Futures, we do have the largest in industry at $15,000 per account per request. Most of what you'll see in the space is going to be anywhere from $1,000 to $5,000. So we are very proud to offer $15,000 per request per account here at Alpha Futures, but please make sure to read through those as a potential futures prop trader, because most out there will be between $1,000 and $5,000 for max withdrawal per account per request. All right, now that we've covered ES and NQ, I want to talk about micros. So I personally really enjoy trading micros. They are going to be 1/10 the size of the typical mini contract we just talked about, for example, ES and NQ. Easy way to find your asset if it does offer a micro is just going to be take the ticker or the symbol of the contract you're trading. So ES, for example, put an M in front of it. So MES is a very popular contract as well. That is the micro for the S&P 500 index. So if we just look here, if we come to specs, we will notice all the relationships and tick sizes are very similar, but they're going to be 1/10 the size of the original ES contract. So we can see here right at the top, my contract unit is going to be $5 instead of $50. So again, we talk about that tick relationship. For every 1 index point, MES is going to return $5 net gain or loss compared to ES's 50. So it's the exact same when it comes to trading, but just understand you're trading an asset that is now 1/10 the size of whatever the mini is. So the more liquid and popular contracts in the space almost always will have a micro contract. We do offer micros here. Some other firms do not. Again, something to keep an eye out there for is going to be if micro contracts are offered. I think they're a fantastic way to be able to manage risk. So I really enjoy trading MES and MNQ personally because they are 1/10 of the size of NQ and ES. Just a great way to be able to jump into futures without taking on too much risk and kind of not bite off more than you can chew with the volatility and leverage that is offered. So don't let that $1,000 to $5,000 withdrawal cap discourage you. As I said, here at Alpha Futures, we do offer $15,000 per request per account. We have seen multiple traders do over 6 figures with us here now. You can see our leaderboard here on the site at any point, and they just were not doing these kinds of returns on their personal account. And remember, our smallest account here at Alpha Futures is only $79 to get started. $79 turning into these kind of returns is just not easily attainable on a personal account. Some might even tell you it's impossible. Of course, nothing is impossible, just very improbable. But futures does give you access to all kinds of leverage and opportunities that you may not have on your personal brokerage account. It's time to decide if futures prop firms are right for you.